Joining me now is Geoffrey Dennis. He's emerging market strategist with Citigroup, and also with us for the hour, Mort Zuckerman of Boston Properties. So, Jeff, Credit Agricole came out and said each day Egypt loses $310 million as a result of these ongoing protests. There's a tremendous amount of that economy that's unbanked, that's cash-based. The number, it's got to be upwards of 310, don't you think?
I don't really know. We haven't certainly done the analysis, but I think you've got to assume that the impact on the economy is very severe indeed. So however this plays out in the medium term, you're going to find the economic data for 2011, certainly the first quarter, are going to be badly damaged. I think that's inevitable. We haven't done those numbers. I can't comment on the numbers specifically.
But we do know thus far that the Egyptian stock market is one of the world's worst performing, down 21%. Up until these protests caused the bourse to shut down. What happens when we see the bourse reopen on the 14th?
Well, the interesting thing is Egypt already started to react pretty badly in the last few days before they closed the market, obviously as the protests began, following, of course, what happened in Tunisia. And now that I think you do seem to have some prospect of there being a fairly peaceful transition in Egypt, although I'm sure a pretty long and perhaps messy one in terms of the personalities and how long this is going to take, I would suspect that when the market opens, you'll probably find people would like to buy, given that emerging markets are a little higher than they were when the market closed, and given that people, at this stage anyway, perhaps bet that this is not going to be the worst case scenario. But of course it all changes day by day.
There's been a huge spike in food prices in Egypt, somewhere north of 40%. This is bound to have an effect on the economy, never mind that it's having an effect, of course, on the intensity of the people who are unhappy and sort of participating in these gatherings. How does that affect the overall economy and its markets?
It's obviously going to affect the overall economy quite significantly. I mean, clearly the disruption you've had is the big threat to the economy. You've lost the tourism revenue for now. You're seeing people not going to work, not functioning from an economic point of view. So the data, when we get it, will obviously be poor for the first quarter. The food price story is arguably a longer-term constraint on growth, like it is in other emerging markets. I think it's very interesting as you try to see what the implications of this could be for emerging markets more broadly, how this all began in Tunisia partly because of food prices. It kind of rolls into Egypt in a very unexpected way. And so I think we're all alive to the risk that a lot of these countries could see slowdowns, who knows, even political protests because of the food price story. But clearly in Egypt, the big issue on the economy is the disruption to activity rather than the food prices per se.
But what's driving up these food prices in this part of the world?
I mean, I don't think it's just in this part of the world. I think it's everywhere. There's a number of things which seem to be happening. Our economists are telling us it's a demand issue. It's clearly a shortage of stocks, food stocks. You've had obviously a lot of inclement weather around the world, once again delivering the similar sort of food price spike you had in 2008. I think it's a combination of those sorts of things. Energy prices are also hurting because energy prices push up transportation costs and, of course, increase the demand for biofuel. So there's a number of things going on. We would not expect this to be as bad a food price inflation story as it was in 2008.
So if half of the population of Egypt's under 25, right, and you're trying to generalize this to the rest of the emerging markets, do you avoid, countries who are going to experience food inflation and have that kind of population skew? I mean, do you avoid the young and hungry, in other words?
No, I think that's very, very short term. I don't think you necessarily do. I mean, first of all, it's not just food prices per se in Egypt. It was obviously a pushback against a very authoritarian regime. It was the political protest per se to do with the regime. I think you have a number of countries where food prices have moved up sharply, such as in China, which we do not expect there to be similar protests. And I think the food price inflation spike is just one thing we have to work through in emerging markets because of the impact it has on inflation overall and possibly on interest rates. But I don't think you go around saying food's a particular problem there, let's avoid that market, because I think it's probably going to be a fairly short-lived phenomenon.
And yet you also see that the pressure on the private sector within Egypt inevitably is going to be create jobs now. Unemployment is already a problem. It's going to be even more so now. So how do you do that? I mean, and are you recommending investing in Egyptian companies? They're going to have to spend more.
Technically, no. We're underweight Egypt, so we're not recommending from a long-term point of view. I mean, what people have forgotten in all of this, the economy was growing quite strongly. It was growing at 6% heading into this crisis. Obviously, it's going to take a hit now in the short term. The government had put into place several structural reforms. Clearly, it just had not reduced unemployment and spread the wealth quick enough for the population faced by food price protests. But clearly, those economic numbers will deteriorate for a period of time. But the market's come down a very long way. And that's why I think when it does open, based on today's news, you probably do get a bounce. Would we recommend it? Probably not at this stage.
What do you think are the reforms that might be introduced that would have the greatest impact on the Egyptian economy?
I think most of the reforms you've got to assume are going to be largely political, to be honest. But clearly they would like to spend some more money on the fiscal side, which would stimulate the economy. But they do have a budget deficit. So I think it's more going to be political reform, which is going to eventually spill over into more stable society and produce better economic growth long term.